Hey, folks, welcome to our live feed. What we want you to focus in on today is not this guy, but, well, Kyle got a little stage fright a little bit ago, folks, so he told me to come out and do the intro. I stink at these things. So welcome and thanks for joining us today. We do have a special guest joining us lately, in about a half hour. You guys will probably know him as the economic ninja. He actually is one of the major crash brothers that you guys hear me talk about all the time. And the nice thing about it is he actually flew into town to meet me last week. Fantastic young man. I learned a ton of stuff, and I get his views now on a lot of this stuff that where he's focusing in on. So what we wanted to focus in on today is the thing that's basically holding a lot of people back from buying a home in today's market is the payments. Okay, so today the Federal Reserve came out and they're telling us what exactly they're going to do. Well, they came out and told us there's really nothing that they're going to do right now, but we want to take a deep dive into the transcript that they provided us. That's what we're going to do today. And then we're going to talk about and see the instant reactions that we're seeing to mortgage rates. And then we're here to basically answer your questions, especially with the economic ninja coming on board. You're going to see us going at it a little bit. Now, he's a really nice guy, and we're going to talk, his take on a lot of this stuff as well. So without further ado, what's going on, Kyle? So what'd you think of today's, I know you have it live. What's the instant reaction to the bond market now that the Federal Reserve came out and said they're not going to change anything, but you highlighted something really cool that I didn't see in the transcripts. So
I can pull that back up.
MBSs are doing.
I certainly can. Do you want to see the transcript or the MBS?
Let's go with the MBS just to see what the reaction is. Okay. And then we want to kind of answer your questions on it. So nothing. They're up 24. They stayed up. So what you're seeing on the screen is what's happening to basically mortgage rates. Okay. So what that you're seeing on the screen, what exactly it is it's a mortgage bond that trades on Wall Street. So you might not even realize it's out there. This bond is actually what creates your mortgage rate, okay? You take the bond yield and then you add in some profit margins at the bank and what we also call LLPAs, and that makes up your mortgage rate. What you're seeing on the screen right now is what's happening to the price, and I'm going to emphasize the price of the bond. So what you need to understand is as the price goes up in value, yields or rates come down. Okay, so there's an inverse or a yin-yang effect. Prices go up, rates come down. Prices go down, rates go up. We like this pattern. Can you flick on like a 1 month chart? Let's see where we were about a month ago compared to where we are now. So you can see it's down. So what does that mean? Price is down, rates are up. Okay, so that's why we've seen, if you go back, if you could do like a 6 month, you'll see there it's a complete roller coaster here. You see back in October, it was way up there. And then it started coming down, and it's all over the map. But if you go across there, we're basically where we were back in November. Okay. If you can go back go back to a year, because in October of last year, look at that. Look at that. That's where October was. That's when rates hit 8%. Okay. Then we had a huge rally. Again, prices going up, bringing down yields. And so that's what you're seeing right there. So that's what we're going to talk about today, dissecting what the Federal Reserve said with mortgage rates, because the two most asked questions that people have for me is, Dan, what's going to go on with my home values? And what's going to go on with interest rates? I don't know what's going to go on with your home values. That's one of the reasons why we asked the ninja on with us. He's going to give us his perspective on the economy, his perspective on housing, and what the government's going to do. And it was hard to believe when I met this young man. We have a lot in common in regards to the economy, the government overspending and things like that. I'm a little bit still not on the fence that the housing market's going to crash. I'm talking 30, 40%, but we're going to get his take on that today. So that's what we have in the economic calendar for today. The Fed should be going live here in about 25 minutes. So if you guys have any questions out there that you'd love to ask us, please chime in right now. We'd love to have you. And then the ninja is going to join us here in about 20 minutes to kind of take over the show at that point. You're free to ask him any questions as well.
Do you just want to, in general, go over the Fed statement here, and then we can kind of talk about how that impacts rates and what they came out and said?
Yeah. And the thing that Kyle and I were looking at right before we went live is one part of the transcript that it kind of, I'm not sure why they did it specifically. And what I really mean is, okay, so let's go through the parts that we're having. In recent months, there's been a lack of further progress toward the committee's 2% inflation goal. Okay. But if you scroll down, where's the mortgage-backed securities markets that we can kind of focus in on?
Right here. There we go.
If you actually go to, and this is kind of a cool, if you go to cnbc.com and just click, here's what changed in the new Fed's statement. Can you find that real quick?
Yeah, let me take a look at
That
that.
one, the cool thing about that is it'll show you the exact changes that took effect. That's what I usually look at, because the whole when the Federal Reserve comes out, usually the markets have most of it pre-priced in, but the markets are sitting on the sideline waiting to see what changes. They're going to just make little minor specific changes in their verbiage. That's the stuff you need to focus in on. And then what happens is they publicly come out with this statement. Federal Chairman Powell come out and he'll read what's going on. And then what he'll do is he'll start taking questions from a lot of the news agencies. That's when everything starts to really roll. But you can see the red pieces of this puzzle are where the changes took effect. The one thing that I was trying to explain to everybody previously is, remember when we were talking about the price? As the price of a mortgage bond goes down, the yields go up. And when the prices go up, the yields come down. Okay, so what I want you to focus in on is also the Federal Reserve, why mortgage rates went so low back, a couple years ago, is because the Federal Reserve came in and they were buying about $40 to $60 billion a month in mortgage-backed securities. Okay, so again, what happens in this case? Well, you're buying and buying and buying. When you have a ton of buyers in the market with a finite amount of anything, prices go up. Okay, when the price goes up, yields come down. What they've done is they stopped buying mortgage-backed securities. That put pressure on the bonds and rates. Now they're selling. So not only are they not buying, they're in the market selling, adding to the fuel to the fire. So adding more supply out there. So again, as the supply, think of the housing crash in 2008. Why did we crash? Because we had tons of people going into foreclosure, losing their houses, putting the houses on the market. So you had a ton of supply, drives down the prices. Well, right here, you have the Federal Reserve adding 25 billion a month in mortgage-backed security notes to the economy. That in itself is going to push prices down and rates up. So you have basically a domino effect with a lot of this stuff. So that's what we're seeing right now. So, but behind the scenes, what we're going to see is once the Federal Reserve comes out and starts talking, they're going to ask him, point blank questions like, what's it going to really take for you guys to pivot? What's it going to take? What are you looking for? And that's basically the specifics that we're looking for in the comments from the Federal Reserve. So if you guys understand that, I'll use the ninjas approach on this. If you understand that, we're going to make our own thing. Kyle, what did we think of the other day? A brain or somebody thinking or something like that. It's like, because we want you guys to think, we're putting this in your lap. We want to give you the tools to figure out, should I buy a house in today's market? Should I buy maybe an investment property? What should I do? So you guys can do your own research. But you remember?
Yeah, I think the main goal was like being able to take away that you learned something versus I see a lot of channels where it's just like, oh, was it just complaining the entire time? I feel like there are a lot of live streams where it's just complaining exclusively over and over again. I'm like, this is getting boring. Just complaining about things instead of actually like learning something. I do want to just mention who's in here. We have Pendragon in here, Rojito, Joseph said, "Wave if you can see us." I can see you. Hello. Jose said, "First time commenter, is your audience mostly play later?" I don't know what that means. Do you know what that means?
Do they usually watch us later, or is there a lot of times is mostly people live?
I see. Looking forward to seeing Travis. We see, who else do we have in here? Hi, Kyle and Dan. Is this his thing? Is the hand wave? Is that what that is?
I don't see it. I just see the verbiage.
Oh yeah. I don't know how to make the actual thing in there. Let's see. We have questions about buy downs. Do you want to cover any more about the market before we jump into questions, or did you want to?
Let's ask everybody, if you want to talk more about the Fed and interest rates, give us a thumbs up on that part. If you would rather us speak about real estate, our expectations with that and so forth, maybe give us what would be another thing they could do, a house, and a house icon. I don't know how easy these things are to find. We want you guys to understand. Okay, and that's why we have, the biggest contrarian in the market, Ninja, behind the scenes, because we're gonna ask him, and I want you guys to ask him point blank questions, because this is the context. I've been waiting for one of the Crash brothers to join us, and I reach out to a lot of these guys, and you see a lot of them just walking around town complaining about their insurance or this and that. But when you ask them a specific question, they just yell at you, and they don't really know the answer. I sat down with the Ninja over the weekend. We went to dinner, had enjoyed some time together. This guy's a genius. So just letting you know, I found that more enjoyable. So we have a couple people talking about the Fed, a couple people talking about houses. So what do you think, Kyle?
When's the video with both of you coming out?
I'm working on that as we speak, actually. It's already filmed.
Okay.
We're just editing it, and then we'll post it probably as 2 or 3 different videos. So because I wanted to get his take on, there's a lot of stuff that I vote, or I don't want to say this. He said, you got to come out and tell people how you truly feel. Like, you guys know how I feel about like the student loan debt. Okay. So one interesting thing that came out over the past couple of days is Jamie Dimon. He came out, and I think it was on Saturday or Sunday. He did an interview, and I watched it, and I'm like, oh man. I'm usually not a Jamie Dimon fan, but he came out and he nailed. I mean, I was completely impressed with the guy. And he started talking about, they're trying to ask him about politics and things like that. And he didn't really want to dive down that area, but he's like, the biggest uncertainty we have right now is world conflict. And I'm blaming a lot of that on the government right now, and their massive debt. How much debt are they exploding onto the scene? And then today I saw another thing is President Biden is eliminating 60 billion dollars for students who went to some art institute. Well, I don't want that burying you and me and everybody else in our country because of this. Go and sue that college. Okay, so those are the things. I know I'm going on a rampage, but those are the things that we talk about. We were talking about the national debt and things, and everybody thinks, oh, I'm getting my student loan deferred, and I don't have to do this, and I don't have to pay that, and they don't. Guys, somebody's paying for this stuff. Somebody. And if it goes on the taxpayer, that means it's adding to our national debt. Our national debt is already 34. Is the number trillion or gazillion?
I think it's with a T.
So this is my passion. So and we'll leave it at this. When he joins us, he's not 100% against owning houses in real estate. He did say real estate is the biggest wealth builder in this country, but you have to know how to do it right. And that's what we're trying to help you guys with. I don't know what your financial situations are. Kyle and I don't. We don't know where you live. We don't know how that market is doing. So those are some things we're going to ask him to. How do you analyze the market to figure out, is it a good market for you to buy, or should you just rent? And our job here, Kyle, and what we try to do is education. And then based on the education we give you, hopefully you use our services to take the next step. So, okay, I talked enough.
We have a question here from Jose. Said, Dan, do you think the Fed is waiting for high unemployment news to be deafening to lower rates?
Here's my thing on the employment rates. I don't really think they're going to see, and this is my take on it, and you might be able to answer this. If you hire somebody, I'll just say it, and they're illegal, they're here not with properly, does that go into the employment numbers? Would you happen to know that? Are they just saying, okay, this person got? I mean, they could have a fake Social Security number because they're on payroll.
I don't know.
Okay, I would assume they are, because a lot of these, when people apply sometimes with us, and we might catch them, they have pay stubs, W-2s, things like that, but it's not real, but they're paying their taxes. Okay, so if you have, let's say, for example, 10 million people came here illegally, all right, in the last couple of years, plus you have legal immigrate, people coming here legally. So what's that equate out to? I think we usually have 1 million or 2 people come in legally each year. So if you go 3 years, you got 10 plus 2, 4, 6. So we got 16 million people added to our country in the past 2, 3 years. They're going to get jobs. So are they great paying jobs? That's where you really need to focus in on. Are they service and hospitality jobs, which are well needed, and they're paying minimum wage unless you're in California making $20 an hour, I think it is now there in minimum wage. So I don't really think we're going to have the employment numbers crashing. That's my take. But the one area that I wanted, which shocked me last night, I almost did a video last night when I saw Starbucks earnings coming in last night after the bell. They didn't hit their projections. When you have Starbucks, Kyle, how many Starbucks you have a day? 10, 15, 18?
I haven't been to Starbucks in years.
But a lot of people, what I was trying to explain was, dude, you're supposed to help me on that one. No, I'm kidding. You have young girls, teenagers, all the way up to you. My mother goes to Starbucks. Everybody goes to Starbucks, not once, maybe twice, maybe 3 times a day. When you start having Starbucks not hitting earnings, then another piece that you had today is Yum Brands. Yum Brands has Taco Bell, Pepsi, Kentucky Fried Chicken, things like that. They missed earnings. So now you're starting to get down to us common people, the ones that don't make, hundreds of thousands a year. We just live paycheck to paycheck. That when you start, you have Starbucks and now Yum Brands not hitting numbers, that means people are starting to cut back. Their credit limits are out. This is the normal. We do have a lot of people that are very responsible with their debts and so forth, but there's still a lot of people that just, they're living for today. And I get it. It seems like after COVID, everybody's like, I don't really care about retirement or things like that anymore. I just want to have fun and live my life because I don't know how long I'm going to be here. It seems like that was the norm for a while. And now people are starting to say, woof, my credit cards are maxed up. I have no more money. Now what am I going to do? So you have probably half the country in that situation, the other half or 0.25% that aren't so bad. So again, when you start having Starbucks and Yum Brands and companies like that not hitting projections, that's starting to show cracks in the foundation, especially at the debt load that we're seeing in today's market. So that's that piece of it.
So when you're seeing those signs of them not hitting those targets, that's potentially showing that maybe we could see inflation start coming down a little bit more, or that the Fed's decision of increasing rates, the federal funds rate, is helping to slow down the economy a little bit. Do you feel like that's good news for mortgage rates, or can you explain to people a little bit about how inflation, why we're so focused on inflation in relation to what's happening with mortgage interest rates?
So just think of inflation as it's deteriorating the value of your dollar. Okay, so every year your dollar is worth less. When I was a kid, I remember in the 70s, I went to get gas. I wasn't driving at that time. Hey, Orlando, thanks for joining us, buddy. And I'd love to have you on my show one of these days. So if you guys would ever answer my emails and so forth, I'm not going to throw you in front of a bus. I just like to talk to you and just get your side of this equation. So I'd love to have you, buddy, if you would have the nerve to join us, I guess. But the prices of everything are going up. So we had COVID. People were flush with money. Okay. And I've proven that 100 times. Okay. So people were flush with money. Then you had supply chain issues. So every company was raising their prices because they had to. Okay. So the problem is now that nobody's going back. If people were buying your product and you had it for $50, then you went to 60, then you went to 70, then you went to 80, and they're still buying you basically out of the store, are you going to come back and start lowering your prices? No. So we need people to stop spending so much. So so what's happening now is interest rates are going up, driving up everybody's cost of capital. And so that's what you're starting to see, that really taking a bite out of people's incomes. They have to pay more interest on things. And then I was just reading the questions, my apologies. So then you have the deflation of your dollar. So every year, let's when inflation was at 9%, you have to think of now your dollar is worth 9% less. Okay, so what I was getting at is like when I was younger, I don't know what's going on, but when I was younger, I'd go get gas with my parents and it'd be 25 cents a gallon of gas. Now it's, well, it depends on what day you're driving home and back. It might be $4 or $5. So that is inflation. That's how prices continue to go up. They normally go up about 2% a year. That's been the norm for years and years and years. And then all of a sudden you had COVID, which just blew this whole thing out of the water. And again, what happened was the government is flushing people with money. Okay. Companies are raising their prices. People had the money to pay that. You had, and one of the other things that happened during that time of COVID, you guys might not even realize this if you're not a homeowner right now, is you didn't have to make a house payment for 18 months if you had a loan that was a conventional loan with Fannie and Freddie. And that's probably 90% of the people out there. So you didn't have to make a mortgage payment during COVID. You didn't have to make a student loan payment during COVID. So you didn't lose your job or anything. So you have money coming in. You might have stimulus money coming in from the government. So now you have more money. You don't have the two biggest bills that you would possibly ever have in your life, which is a mortgage and student loan debt. You don't have those. Well, we're not a nation of savers, so we save a little bit and we just spend and spend and spend. So yesterday, Amazon came out with their earnings and they blew the doors off. So it's starting to look like people are buying the necessities, but starting to pull back on things like, eating out at Kentucky Fried Chicken and those places, and also going to Starbucks, because I couldn't have fathomed, before my dad died, I took him to Starbucks one time and he's like, I'm going to spend $6 on a cup of coffee. And I'm like, Dad, but it's good coffee. And he's like, I don't care.
Is it though?
So that's basic. Yeah, no, I don't like it. But I just took him there just to show him that it's like, here's what people pay for a cup of coffee. It's nuts.
We just got 6 lender reprices for the better.
Oh, just now. So what are we seeing? What's MBS is doing right now?
Can you see it on the screen?
Oh,
just took a nice shot upwards.
Nice jump. So they're up 53. So the comments coming in from is the Federal Chairman Powell talking yet? No, he's not talking yet. Let's get to some questions. And Orlando, again, I want to thank you for coming on here. I know you're one of those channels that I kind of go after. All I want is people to get the facts. And a lot of times the way the news is spun, you can find data to basically find anything you or have anything prove your point. But I'd love for you guys to reach out to me and just do maybe a live event where we can just actually talk. We probably have more in common than you think. So if you can go to some questions, let's get to those, because in about 8 minutes, we're going to have Ninja on here, and then we're also going to check the markets.
Yeah. Let's see here. We got, I took it away. Is a 3-2-1 or the 2-1 buy down a good solution given the current interest rates? So basically, these are two different types of temporary buy downs where they can help lower your monthly payment in the first 3 years or the first 2 years, depending on which type of buy down you get. And we do have a calculator that goes through the 2-1 buy down. If you're interested on the site, if you go to 2-1 buy down, it explains how all of the math works. And so, yeah, temporary buy downs can be helpful in reducing the payment in the beginning. The only thing I'd be careful about with these temporary buy downs is a lot of people pitch them as, hey, look, here's how much lower your payment's going to be in the first year or two. And people are banking their budget around having these lower payments up front. And we don't think that's a smart decision. Basically, with the temporary buy downs is if rates lower within that first 2 to 3 years, you can always refinance and be able to get the money back that was coming from the seller or the builder. Again, I'm not going to go through this whole thing since we're, what do we have, about 6 minutes until he jumps on here. But basically, It will show you if you do refinance, let's say within 10 months, that there's still money remaining in that buy down account that could be credited back towards you, either towards the refinance or closing costs for a refinance. Let me see what other questions we have in here. Okay, we just went through this. Growing Life Organic said, I guess Tim Dillon or Dillian was right about the real estate market. It's a real knife fight out there.
The amazing thing right now is I've gotten 4 contracts in today, and they're all, I don't want to show you on the screen. It's amazing. It's amazing how many bidding wars are out there. And that's the tough thing. And so I see when everybody's like, the market's crashing, this is bad, and this is bad, and that's bad. But where I kind of go in odds with people is when you say, you'd be an idiot to buy in this market. There's always a good opportunity somewhere, somehow, some way. Okay. That's all I'm saying. I'm not saying you have to buy a house. I'm not saying you shouldn't buy a house. I'm saying if you've decided to buy real estate and get into the market, we'd love to be your source to help educate you with these things, help you with the financing and everything else. So that's what our main focus is on this channel. So that's why some people I call out, because they'll pull this data. Vegas. How long as we've been told that Vegas is going to drop 50% in the year, and that was basically in 2021, 2022, 2023, and 2024. Then we have the Case-Shiller index yesterday that came in and says nationally home prices are up like 6% again. So, but then Ninja is going to have a little bit of a different take on that, saying houses peaked in June, and we'll go over that insight as well. That's what the market was thinking. I think it's unlikely the next policy rate will be a hike. So a lot of people have been saying, here's where the Federal Reserve is in a really bad spot. If you go back into the stock market and look at the days that you had huge rallies, you're going to see one pivot point, and that pivot point is going to be the Federal Reserve. The Federal Reserve came out with something that day, or somebody that sits on the Federal Reserve came out that day and gave us some good news, and the markets just go nuts. That's what's driving the Federal Reserve nuts, because the markets, like last year, the S&P was up 25%. I didn't make 25%, but I'm just saying the S&P, if you were in it for the whole year, you're up 25%. So if you're a consumer out there, these prices going up and things like that, you look at your portfolio, you look at your 401k, and you're still sitting there saying, I'm not in bad shape. Yeah, I'm living paycheck to paycheck, but my stocks are going okay. I'm putting a little bit of money in my retirement account. Everything is fine. But what was different in 2008 than what is now is the market crashed. It went down over 50%, the stock market. I lost my you-know-what in there. So people, once the stock market starts getting affected with this, especially Bitcoin, you have Bitcoin down 10% in the last couple days. You start having people losing money or looking at their portfolio saying, ooh, my finances aren't as good as they were. We got to start cutting back. That's what you're finally starting to see, I think, based on a lot of the earnings reports that we have. So let's see what we got here. I'm trying to get Ninja on here to see where he's at.
Yeah, and we had it looks like this is from the conference for the Fed to pivot to a rate hike. Powell said policy makers would need to see persuasive evidence that the current monetary policy stance isn't sufficiently restrictive enough to bring inflation back down to the 2% target.
Well, the pisser is 2 years ago when inflation went over 2% and then went to 3% and then was climbing and climbing. The Federal Reserve said, man, we're going to let it run a little hot for longer. Mistake. I don't think they realized how much purchasing, how much money people had in their coffers to get them through this. I was in a wedding in October it was a wealthy batch of people, and there was a guy sitting there from Morgan Stanley, and he said there's about $11 billion sitting on the sidelines right now waiting for some kind of investment, some kind of move to make. And here's the disconnect with a lot of these things. Usually in a normal, strong market, in an economy, you're going to see the stock market ticking up, 7, 8, 9% a year. That's the norm. The bond markets are usually just completely stable. However, when we have a catastrophe in the world or somewhere else, let's say Russia invaded Ukraine. Okay, what normally happens when that happens, the stock market drops like a sharp knife. People then move their money out of stocks into a safe haven, which is bonds. And you're not seeing that in this market. So that's the frustrating thing, because people they're with the stock market's coming down, bond rates are dismal. So you normally don't see interest rates going up at the same time as your stock portfolio going up. Usually there's a kind of a yin yang effect to that. That's why it's a really scary market right now, because there's no direction. Everybody, all markets are pivoting exclusively right around the Fed at this time, and that's not a healthy market.
Lilia said, are mortgage rates going up within these next 2 months?
I have no idea, to be honest with you. I hate to say it that way. It's the truth. I don't know what house prices are going to do. I don't know what mortgage rates are going to do. And I know that's not, you're here to find some insight on it. But it's going to be completely dependent on what the Federal Reserve, what they see in their data. And that's why I do a news channel. I do my videos every morning to let you know what the economic news is for the day, what events are taking place, and then how that is affecting the markets. And when I talk about the markets, I don't talk just about the stock market. I talk stocks, bonds, real estates, what's going on with mortgage rates and the such. And so that's why every day I look at this, and yes, my opinions change, which they should change. I have people that get on me saying, "Hey, Dan, you said 6 months ago mortgage rates would be at 5.5%." I said, "Yeah, but if you have watched my videos every day up to that point, now you know why I'm saying that's 6.5%." So that's, you have to change your kind of outlook based on the data that you get.
Let's see. Hey, Kyle and Dan, always appreciate the updates. My question is, what's the difference between Fannie Mae and FHA? So Fannie Mae is who makes the rules for the majority of conventional loans. Fannie Mae and Freddie Mac kind of set the rules for conventional loans. FHA is a type of loan. So Fannie Mae, Freddie Mac are conventional types of loans, and then FHA is a little bit different. So conventional is going to have a minimum down payment of 3%. I realize you are only seeing Dan. And FHA has a minimum down payment of 3.5%. FHA tends to be better for people whose credit score is on the lower to middle range, and conventional tends to like a lot higher credit scores than FHA does. If you're curious about exploring a conventional loan, we do have 3 conventional loan grants that may be a good option for you. If you're interested in taking a look, that go up to $7,500. So you can go to our website, winthehouseyoulove.com, and then go to Grant Finder. So in here, you answer a couple questions, and then we can show you what different grants you might qualify for here and how much it could save you as well.
Perfect. The market is the Dow. We have the Dow Jones up right now, 515 points. The NASDAQ up 258. The nice thing is, the good thing is too, is we got oil. Oil is down, let's see, to $79 a barrel. They were expecting oil to hit $95 to $100 a barrel. So you guys might want to say, who cares? Okay, that's what I would probably say. If you're watching a mortgage channel or a real estate channel, you're like, okay, why are you talking about oil? Well, think how you got to work today. Think on how you got dressed today. You took a shower, you ate breakfast, you got in your car, you went to work, you did. How did all that take effect? What was probably the one item in almost everything that you did today? Oil. So it's in everything, and it gets our products out of the ground from one place to the other and so forth. So oil prices are a huge inflationary trigger in our economy right now. So as you get oil to $90, $100 a barrel, it's just increasing the cost of goods for all of us. So oil is a huge piece of the puzzle a lot of people miss. So that's why even on my channel, I talk about oil. What's oil doing? Because that has huge inflationary impacts. That's why last reading on the CPI, I'm like, I don't know what the CPI is going to do, because oil went from about $70 a barrel to 85. Big move up. So I'm like, I don't know how that's going to affect, the inflationary numbers, behind the scenes in the CPI report. So I don't know where he is. I'm trying to reach him. Let's see if he.
I'll say I have the interview thing open, so I'll
Okay.
let you know if I see him in here or not.
He comes in, he will pop in. I just spoke with him about an hour ago, so I know he's coming on board. He might be actually doing something because of the Fed thing on his own right now, and then join us in a second. So if you guys have any more questions, please roll those out while we wait on the Ninja, and then we're going to continue to monitor the markets as this go. But ask your questions, in regards to the Fed, housing, locations. We got a ton of tools for you guys that most of you probably don't even realize.
Joseph said, would you recommend putting your well, it says finance, but fiance as a co-borrower signer to raise purchasing power? Yeah, if you need, okay, I see you put fiance in here. Yeah, if you need more purchasing power, that's absolutely something you can do. What I might suggest is go ahead and getting a pre-qualification with your fiance on the application. And then if you end up finding a home that you don't need that amount of purchasing power, you don't need them on the loan with you, then you can take them off if they don't want to be on the loan. So sometimes it can be beneficial for people to only have one person on the loan and then both people on the title. And the reason you may want to do that is because it limits any risk if there was any late payments or different like credit events like that. So that way, if there was a late payment, it only impacts you instead of both people. Okay, we have him in here. Give me 1 second here to
Can we get a drum
change
roll?
this over. Yeah, give me a drum roll here.
Buddy!
There we go.
I could have sworn you said 3 o'clock Eastern or Central. I could have swore.
Central.
Sorry about that.
No, that's my bad. I greatly appreciate you even coming on. It probably me, because Kyle's this way, you're that way, and I'm like, man, if he blows me off, I'm going to fly out there and, well, you're bigger than me. So
Doesn't help when we're all in different time zones.
It's so funny when you say bigger than you, because people do that all the time. They always look up and they go, man, you're a lot taller than I thought. Right on. So how can I help this craziness out? I don't even know what we're talking about.
So we do a live every Wednesday, and today we wanted to really focus in on the Fed. So I know you and I got working on our videos. So thanks again for last weekend. That was fantastic. I just gave you kudos to everybody on here, and a lot of people are joining because of you. So thank you so much for joining.
Oh.
So I know you're on. We actually had one of the Crash brothers on here. I don't know if he's still on here. I won't say who, but I the biggest appreciation I have for you is we know we're on different sides of the fence. We
Totally.
get along well. We have dinner together. We talk. So it's I mean, and you know how I feel about things. But the nice thing about how we ended some stuff was my biggest take when I asked you the question: Are you 100% against buying a home? And your comment and your answer was, it really intrigued me. You're like, no, real estate's the number one way to get wealthy, but you got to know how to do it. So we go live every week and we just answer people's questions. But what I wanted you on for today is just, if you could give us some insight, with the Fed. And I know we talked for hours, and even our video, your son was there, and it's like, wait a second, this video is going like 5 times longer than it should go. So what I really want to focus in on is what's your take on what the Fed just did, and just elaborate on the economy and the national debt, because I get on, I bitch and moan about the student loan forgiveness program. And I was going through the national debt this morning and some other factors. And then in Yahoo Finance, the thing that pops up is Biden forgives $6.9 billion in student loan debt for if you went to the Art Institute. And I'm like, this is what we don't need. So all yours, buddy.
Yeah. All right. So there's a lot in that. First, let me say that my friend Johnny called me and he goes, or I called him, he goes, why aren't you watching the Fed right now? I'm like, I don't give a crap what the Fed says. I don't even know what they've said yet. So I'll ask you in a second to answer that. The reason why is because I understand long-term trends. Secondly, crash bros, people that get pissy with each other when you don't believe the same way they believe. I have to say, a true wise man listens before he speaks or she speaks. And not everyone has every piece of the puzzle. However, there are people that have the ability to take many pieces of a puzzle and put them together, right? That's a skill. I do believe that there is never a better time to buy a house if you're paying more for rent and you're going to be living in that area for a long time, and you could find something that you could be happy with for 20 or 30 years. There's never a bad time to buy. However, there are also better times to buy or better times to sell. So close that book right there. Now, when we're talking about Biden erasing debt, what he's doing is he's salting the nation with a hope that they're going to vote themselves prosperity. All right. It's a trick that's been in the book forever. As a matter of fact, I think it was Thomas Jefferson that said, I could be totally wrong, but when a public figures out that they can vote themselves prosperity, we're pretty much done as a nation, right? I'm totally paraphrasing, obviously. We're in a moment where, again, I don't care what the Fed did, because the Fed has to raise rates in order to squelch inflation. But what people need to understand, that being, they need to create higher unemployment. They need to build a environment that causes you to not want to spend money, or you to be in fear of spending money because of what's coming next. But what we have today that we have not had ever since our country has been a country is an implosion of our bond market. And I'm talking about in modern times. And also, ever since we started to enjoy the ability to print and export inflation around the world, we are in a moment now where we are losing that privilege because buyers are simply not showing up to our government debt auctions. So we are losing control of our ability to export inflation, which means inflation is going to come back in a second wave back to our nation. And it's a whipsaw effect because the Federal Reserve did not clamp down interest rates, or at least let's put it this way, they did not raise them high enough and fast enough in the beginning to completely stop spending. There was these tiny little increments that actually caused people to, one, run out and buy things ahead of inflation. And secondly, as it was happening slowly, consumers got squeezed ultimately because companies just slowly brought their prices up and people kept spending like drunken sailors. So that's the after effect of the Fed moving too slowly. But in all honesty, I understand why. Because the Fed is scared to death with modern technology like this platform we're sitting on talking on, people understanding how the Fed works and then ultimately being blamed, which could cause them to lose their charter, which most people don't even understand to begin with.
Yeah.
Sorry, that's a long answer.
How do you think, and you brought me up to speed on this, the Repo Act that just passed, I would have never known about if it wasn't for you. How will that affect foreign government from buying our bonds?
Okay, I'm not remembering what we talked about that night. We had a lot of fun. So when you're talking about a Repo Act, I'm not familiar with the Repo Act. I'm familiar with the repurchase window with the Fed. Is that what you're referring to?
Where Biden, it was just voted in last week. I think because you told me about it on Friday, where he could actually seize. Well, he's going to seize Russia's assets.
Okay, yes. Thank you for reminding me. Yes. So we are watching not only Biden, but Yellen do some pretty crazy stuff. So you're absolutely right. They passed a law that they've been threatening for a while that allows our government to reach into bank accounts that are owned by by Russian entities or Russian citizens, take those assets and give that money to Ukraine. That threat started in the Eurozone when the Ukraine-Russian war started. And now it's been made legal by our Congress to let the White House make that decision. Will they do it? We don't know, but this is a shot across the bow. What happens is they first threaten it, that they're thinking about making this an ability. Then they make it an ability. Both of those scenarios, they haven't done it yet. They wait to see what the other side does, and then they either never do it or they do it. And we've already seen Vladimir Putin come out and just straight up just say, if you do this, you're going to be in a lot of pain and economically. And I want people to understand that they have the right and the ability to do that. When our president decided, hey, it's a great idea, let's crash the ruble and really get them into the hurt locker. When Vladimir Putin turned the tide and said, hey, you know what? I got an idea. America is running the price of oil up all around the globe through the trading on the futures on the stock market. Why don't we offer you our oil? But in order to buy it at a discount, we're going to give it to you a discount. You have to do exactly what America forces everyone to do. You're going to have to buy our currency, the ruble, and then buy it in rubles. This ultimately made an immediate a market change where all of a sudden the world had a demand. There was a demand for rubles because people wanted a 10 or 12% discount to what America was running the price of oil up. And they made that demand. My point being is that Russia has the oil and the ability to mark it down in price. We are also seeing Russia colluding with other BRICS nations like Saudi Arabia and OPEC nations to squeeze the dollar when it comes to oil trade by allowing oil to fluctuate massively in price, whether it be to the upside or to the downside. These market irregularities, if they're not done by America and they're done by an outside force, can actually cause big swings in our economy, in our nation. And I would like to point to what happened during the shale boom And then all of a sudden the shale bust because of the price of oil falling drastically. And what that does is it causes a lot of sentiment to drop in America. It causes a lot of unemployment and things like that. So that's why I think this Repo Act from President Biden's a big deal. Not that he's going to use it, but the sheer threat of it, like Yellen going to China and saying, if we catch you funding Russia for the war, we're going to sanction you. Even though China and the rest of the world knows that we are funding the opposite end of the war. It's very similar to what the Rothschilds used to do.
Yeah, it is funny how we fund Ukraine and Russia and China are together fighting on that side of the equation. A lot of people don't get that as well. And it's, folks, there is a comment down below. I don't really want to call anybody out, but there's a lot of blame games on Trump did this, Trump did that, Trump did this. Guys, a lot of this is factored on, especially with rates, the Fed missing the ball on some of in many of these areas. Okay, now on to home values, and that's why I had you on the channel.
Real quick, if you don't mind, can I just shake it up a little bit? And let's not get political. Let's get human, right? There are so many people that are so angry with the last president, the prior president, because he did all these crazy things, and I simply ask, what did he do? And everyone sort of looks around. They're looking for an answer because they don't got a good one, and they say the same thing. Well, he was mean, and I said, okay. Did you ever hear him curse? No, he was mean. And I said, well, what was he mean about? And they would bring something up. And I said, well, is it not true? And this is what every single person I've ever spoke to says. It's not the point if it was true or not. And what's funny is that people, they want to get down to emotions. And emotions are what bring a housing market up and crashes it. Emotions are what take Bitcoin to stratospheric heights and crash it. All markets are run off of emotion. And when people realize that, they start to understand why markets move the way they do. So hopefully that's a good segue into real estate. Let's talk about home prices.
Okay, home prices. And this is where we have conflicting views, but the cool thing is you were the only one that had the cojones to come and visit me and sit down and say, okay, let's have dinner over this and chat. Yeah. And it was fantastic. Totally. So what your take on real estate? Here's the area that I get. I've never said, and people put these words in my mouth, I've never said everybody should own a house. I don't think everybody should have a driver's license, for sakes. You know what I mean? I don't think everybody should be a parent. But what I want to say is, like you said at the beginning of the segment, if you have a good job, you have, maybe a child or child on the way, you're in an area that you're going to be in because you grew up there and you live there and, so forth. It's not a bad idea to buy a house if you're going to be there long term and that's what your goals are. But you have these people come out and say, well, you'd be an idiot to buy in today's market because the market's going to plummet 50%. And that's where that's my side of the equation where I'm like, well, that's a broad statement. So what your feedback on that? I'll just tee that one up for you.
Well, first off, I have to say that the 50% retracement is totally doable because I saw my home drop 46% peak to trough in California. But that's because it rose exponentially as compared to homes, let's say in Oklahoma, Midwest, Texas at that time. Now you've seen homes across the nation do something they've never done in the history of America. So just like Newton's theory of relativity, when something goes up, it's going to come down. That's just normal. Ironically, the people that are screaming that everyone should buy a house or deserves a house, they only scream that when prices are high. They then turn around and mock you, like I was mocked in 2001 when I started buying up homes hand over fist, as the Fed was plunging rates after the dot-com crash in 9/11, and after home prices in my area were actually falling as well, albeit for just a very small, period of time. I was getting mocked. I was a fool, right? Well, here's the truth. Home ownership is hard, but it has a reward. It has multiple rewards. It's the only asset class that you can make money 4 or 5 different ways from. And it's the easiest path to a millionaire. But here's the cool thing. Not everyone should be a millionaire. Why? Because not everyone deserves to be a millionaire, because I watch them spend money like drunken soldiers when they go, or sailors, when they go to Starbucks and they buy a coffee that's insanely overpriced, right? So everybody gets upset, and I can understand some of these crash bros that see a crash happening. And here's what's cool. To to warn people about cycles and to help them, you actually have to warn them well in advance. So they actually have time to pivot and prepare. When I called the top of the market, I was about 2 months off from the official Fed, announcement. And what I mean by announcement is they don't come out and say, hey, housing market's crashing. They don't like to do that because they want you to keep buying, because that spurs I'm in a Home Depot parking lot right now because I was late to this on accident. That's what spurs Home Depot numbers, right? Well, the cool thing is we're already in crash mode. The exact same narrative. One day I just did a video on Home Depot's earnings, and I read a story from 2006, and no one could tell the difference. And at the end of the video, I said, congratulations, that was from 06. You know, the actual statements, the remarks from the CEO and the CFO. Then I read that current, earnings numbers. Well, we have the St. Louis Fed, which records the facts, coming out and saying we've already dropped 8% across the country. Today, I did a story out of Newsweek. 50% of the states are seeing price declines in homes. These things come on slowly, and then suddenly, and it comes on suddenly because that's when the news media has now allowed you to see this info. Everyone loves to quote NAR data, but if people realized that, Lawrence Young, which is now a chief economist, not the chief economist, there's multiples at the NAR, used to be a meager economist in 2004 all the way to 2009 and kept singing the praises of real estate in America and how it's not going down. And what he was doing was straight up lying to the nation. At a certain point in 2009, people were calling for him to be fired. I know it sounds crazy because they're like, is this guy a nutball or the people at NAR nutball? And everyone loves to quote their information. And what they do is they don't tell you the truth because their entire being, their ability to survive and thrive, their association, is predicated off of real estate agents across the country being forced to pay into their association. So they are going to be an even bigger cheerleaders than real estate agents and mortgage brokers that are cheerleaders. And I totally get it. There's commerce every day, and homes need to be purchased and homes need to be sold. But there's also a difference between the velocity of transactions and how many, listings are out there. Another thing that blows me away is that the true real numbers are always quoted. They look amazing because they're quoting you the lowest end home prices. Those are the ones that are moving 1 or 2%. However, when you see the high end real estate, that's always the first to collapse in a cycle. We saw that a year and a half ago. Now you're seeing the mid-tier range, the 800 to 650,000 range being affected because the middle class cannot afford those payments. And then ultimately you're going to see a dive down in the lower payments, the lower price homes. And so people can get upset all they want. And I get there's a lot of crash guys out there that see it happening and they don't understand the stress of trying to explain it to people. That's what I went through in 2006 after I'd sold my portfolio of homes. I didn't have social media to go rant and rave and get upset about, but I told every single one in my family, my friends, and honestly, most of my family and friends, nobody knew how many homes I owned back then because we wanted to keep a low profile. But you can't convince people when it's turning. It wasn't until 2008 when the banks, and this is the key, when banks pull back lending. See, right now they're going to get a little stricter, and they're going to care more about Fannie Freddie products and government conforming products because they just want to sell the paper. Most of these banks just want to move paper. But if we get into a situation where banks, because they're tightening up their underwriting situation, and they start providing less and less money out there, less liquidity, we're going to see days on market explode higher, and we're going to see a way bigger downturn than what we're seeing right now in the market.
So what would you say? And I'll kind of, I know you got a busy afternoon. What would you say?
Yeah, actually, my phone's overheating, so that's why I gotta go quick.
All right, I'll just do one last question.
All right.
I don't know how I'm going to ask it in one last question. Last thing.
No, I'm just going to couple. If my phone shuts down, if I go blank, it's because the Ninja's phone overheated.
Gotcha. All right. I forget what I was going to ask. I'll go through a couple of the questions people have here. I don't know if you guys have any questions that you would like to ask him. Please post those in. We'll get those real quick if you don't mind. Once you got to go, just let me know you got to go because I know I caught you right in the middle of your day. Shoot, what was I going to say? I don't know what I was going to ask you. There's a bazillion things I can ask you, but why don't we just leave it at that? And then I'll be posting our video that we did here recently. And then maybe it's some other time we'll do a live event where people can actually come in and ask you questions, and we kind of take it from there. And we might have just lost you because you just froze. So Ninja, you still there? Kyle, we might want to take him off. It looks like his phone died out. And so there you go. So I got it right
I thought he
from
was
him.
just like sending a text or something. But yeah, I think it completely cut out.
Yeah. So I want to thank everybody for joining him. He, like I said, he has a contrarian view, but when you really focus in on it, what did he say? He still said that real estate is an asset, but not for everybody. So that's what, see guys, we don't sit here and just pump FOMO like so many people think we do. We tell you on a daily basis, Kyle even has his, what platform that you go on before, how do you know that you're ready to buy a house? And he does these checklists, and you guys might have your own checklists, but as the Ninja said, buying in the right time, the right house, if you're going to stay there forever, not ever, but a long time, you have the money and so forth, you're still in okay positions. Even when the markets crashed in the past, the crash didn't last forever. You had that blip or hiccup. He said he lost, 58% of the value of his house. I know that he sold it later on than that and actually made good money on that home. So you can ride that storm out because it's a house. It's a place where you live and you enjoy. It's not a place where you just, you set it over there like your stocks and look at its value every time. I can guarantee you buy a house, and the next 6 months or a year, you're not going to be looking at its price every day to see what's going on with the price. I can assure you of that. So if you got any more questions, please let us know. Give us a thumbs up if you liked today's live event with the Ninja and the Federal Reserve. Right now, we are seeing the stock market is up. Let's see, is it up? Let's check. MBSs are holding their gains. We got the Dow Jones now up 500 points. We were down 500 points yesterday. It's like I've never seen. Have you ever? You're not that old, but have you ever seen this volatility in the market? I mean, I've never in my wildest dreams thinks, if you said the market dropped 400 or 500 points and you said that like 5 years ago, people would be freaking. And now it's
all I've ever known is volatility.
Yeah. It's like, now just wait till tomorrow comes and there'll be some, news out there that'll pop it back up. And that's what, Dow Jones up 499 now, S&P up 52, NASDAQ up 230. Is crypto making a comeback? No, Bitcoin's down to 58,000. That is a huge drop. Oil is down at $78, down $2 a barrel. So the markets are liking what the Federal Reserve dished out. And if you guys my phone got hot, so you can see in his comment down there, if you could post that, he said, my phone got hot. So if you guys have any other comments, please bring them on. We'd love to answer any of the questions that you have. But the Federal Reserve did come in today. They're not increasing rates. They're having a pause, and they actually signaled they don't see any rate hikes in the near future. And that's what's basically calming the market. They're saying, okay, we can kind of live with these valuations, but we really don't need our cost of money going up much more from here.
We're just about here at our time, but I do want to say for everyone questions we couldn't answer, you can go to winthehouseyoulove.com and then here, let me throw this up here, and then click. I have a question first. If you have a question, and then we can answer that there. Or if you'd like to schedule a call, you can click get pre-qualified, and we'd be happy to help. So thank you all for being here. We do this every single week, 3:30 Eastern on Wednesdays. We look forward to seeing you all then.
Thanks so much.